Hey guys, Zob here from OneGlassTrader.com and welcome back to my trading journal, the RSI MTF EA. Now, for those of you who are just joining in or stumble across this video, make sure you check out the full playlist by clicking the link below or by clicking the link in the top right hand corner of your screen now. Now, in this video, what we're going to be talking about is a slight tweak to the EA that I'm thinking about coding, and I think it's going to help massively reduce the drawdown. Now, for those of you who've been following this from the beginning, you guys will know that the EA takes multiple trades on one currency pair and then looks to close out all the trades at 0.1% profit. Now, what I'm showing you on the screen now is an example, and I've shown it before in this video series about how I get involved on a discretionary basis if I've got one trade or multiple trades open that have gone against me, and how I get back in trading a larger lot size to kind of close out all of these trades either at break even or hitting the 0.1%. But traditionally it's been getting out of these trades at break even. And I've been thinking about this for a while now that, you know, even though the drawdown's not big, however, it is inconvenient having this drawdown. And I'm thinking to myself is why don't I add another rule to the EA, which I think personally will reduce my drawdown dramatically, and it's all based on the logic I do from creating a discretionary trade. So I'm going to go through it in this kind of example here, and then what we're going to do, we're going to go back to the charts, look at some of the currency pairs where I've got into a bit of trouble, whereas if I applied this rule at the beginning, it probably would have still got me in the trade, but it would have opened the trade so much later on that I wouldn't have had all this drawdown to begin with. So it might seem a bit confusing, but it will make sense by the end of this video, I assure you. So as we all know, is when the signal or the EA starts to look at overbought, oversold areas on multiple time frames. So my EA is programmed at the moment to look at the current time frame the chart is on +1. So I'm trading the 5 minute, so it's the 5 minute and the 15 minute. Again, you can do more, you can do less, you can do whatever you want. Very customizable EA. And then it looks at the first bar that where both timeframes do no longer align, i.e. they're not both overbought or oversold, it will then open a trade at the close of that bar. So in this example, it would have opened a trade, out after this, red bar over here where there's no arrow, looking to make 5 points. And in this example, it wouldn't have made 5 points because even the low here is nowhere near 5 points. It would have gone against me. So I would have got all this drawdown, and eventually over here around this point, around here, it would have got me out at my 5 point win, which is 0.1%. And for those of you who are trying to understand where have I got 5 points for 0.1%, go back and watch part 1, and all of that will become clear to you. So then I would have been in all this drawdown. So there's not only would have had drawdown, there would have been more time here that I would have been either thinking that I could have just got out, I just could have done without all of this stuff. So in this example, what I would have done is I would have opened a manual trade over here. And the reason why I would have opened a manual trade is two reasons. One is that I've got bearish divergence, so price is making higher highs and the MACD is making lower lows. And then also, and this is the key part of this whole thing that I want to talk about today, is when the MACD line, the blue line, crosses below the zero line. So for those of you who are not familiar with the MACD, it's effectively when the MACD is below zero, it's considered to be in a downtrend, and when it's above zero, it's considered to be inside an uptrend. So if I was to enter short here, I would have gotten a bit of drawdown, not as much as this amount, but then would have very quickly made my 5 points 0.1%. So let's assume for a second that I didn't take a short here. It showed me the signal, and this is where my thinking comes in. It produces the signal, but it waits. It waits for the MACD to cross below the 0 line because it's above. You're going to get it above if two areas inside overbought territory, and then it doesn't take the trade here, but it takes the trade here, so it misses out all of this. So in the examples I'm going to show in a second is where it opens multiple trades. You'll see when you look at the MACD line, which is the blue line, that it's always above or below depending on what we're looking at, and then the trend starts to reverse. I'm doing air quotes here, when it crosses below or above the 0 line. So what I'm saying is it doesn't take a trade where it traditionally does. It waits until the MACD crosses, in this example, below the 0 line, and then it looks to make the trade. I think what that will do is you'll open less trades or less trades when it's really trending. And what it will do, it should hopefully eliminate a lot of your drawdown. So let me show you the charts, and hopefully it'll be a lot more easier. So this is the demo account that I'm running this EA on as a testing, and I'm going to show you a few examples. So this was one back on the 22nd of March on the USD JPY 5-minute chart. So I trade, I think, what is it, 1 2 3 4 5 6 7 pairs on the 5-minute chart, this system. And as you can see here, the EA opened 1 2 3 4 4 trades. Yeah, so it opened 4 trades, and I can't remember if one of these were discretionary or not, but I think it's irrelevant at this point. No, it wouldn't have been. It wouldn't have been, because it would have been over here. That opened 4 trades, and as you can see here, so this is the MACD, and I've just taken off the signal line and the histogram. All I'm showing is the MACD line, and as you can see, every time it produced an oversold signal on the 5 and the 15-minute chart, the MACD was below 0. So if I was to open a discretionary trade as part of the diagram I just showed on the example chart, is at this area here, when the MACD crosses above the 0 line, I would have put another order in over here to get me out at break even. Now, what if I didn't take a trade, I didn't take any of these trades, and only took one trade here at 0.1% to make 5 pips to make 0.1%? I would have had 0 to little drawdown. All of this would have never happened. This trade 1 2 3 4 I only need to have opened one trade. and this is what I'm trying to say, is I would have made, let's see how many points this actually is. Let's just say opened it here with spread and stuff. That's 13 14 points. I would have easily made 5 points just in this little move, and had relatively little to no drawdown, and none of this drawdown would have come into play. Now that's what I'm thinking of doing. I'm thinking of doing, it doesn't take, the entry signal doesn't happen at these areas over here. It happens when you get a signal, and then it waits for the MACD to cross above the 0 line. And again, we can do, back testing through Strategy Tester, different, MACD combinations. This is just the standard 12, 26, 9. Seems to work pretty well every time I've looked at it to go get it there. So that's one example of a trade that got me into trouble. Let's have a look at another one. I think the next one is the GBP USD. So again, if I scroll back over here slightly, strong downtrend which happened all the way back on the 4th. Showed one signal here, and 2 signals there. So 4 trades were opened, the MACD below the 0 line. So all of this all in drawdown. And then the MACD finally sorry, gets above the 0 line at this point over here. And then if I look, let's say spread takes you up to here, you know, you still, this trade got out at a profit, and this one would have also got out at a profit as well. But look, you're only in the trade for 95 bars as opposed to in this one here, you're in the trade for 169 bars. 166 bars, sorry. So, you know, and you would have skipped all of this drawdown, and this had very little drawdown it probably would have had would have been, you know, 12 points, as opposed to the first trade went into drawdown around 50 points at its lowest point. So that again is another example where all of this could have been avoided by, it gives you the signal. It doesn't matter how many signals, whether it's one signal or 10 signals, but all it does, it doesn't do anything until the trend, quote unquote, has been changed according to the MACD over here to go take your buy trade and go make your 5 points or 0.1%. And let's have a look at another example. Another example is the Aussie dollar back on the 3rd of April. They got me in a bit of trouble. You can see over here. 1, 2, 3, 4, 5 open trades, where at the highest was around 40 points of drawdown, and you can see the MACD is above in an uptrend territory, and it, you know, crossed the 0 line around here. This one also got in a bit of drawdown at its highest point, only one trade at 14 points. And again, you know, it probably would have got out around the same time anyway. Yeah, it probably would have got out at the same time, but you've not got any of this. None of this is here, because all the system's doing is just waiting that little bit longer to ensure that the majority of that trend is gone. Now, there will be times where, you know, it does go down below and then goes back up and then starts trending again. That's fine. You know, that would have happened anyway in the old system. But yeah, so that's kind of, you know, what I'm looking at or thinking of doing. And yeah, let's have a look at my current drawdown situation I'm in at the moment. And for those of you who watched the previous episode will know kind of where I am with this. So this is the let me zoom out slightly. I was on the wrong chart. That's the one I'm playing with. This chart over here. Yeah. So for this scenario here, again, you get your signal, MACD above showing an upward trend, which is fine. The signal comes in around here, which when you add spread and everything is probably about the same level, but you didn't have any of this kind of drawdown at the beginning. So even though it does go against you, even if you did open the trade here, but none of this actually ever happened. So that protected you, and you wouldn't have had to seen this or be worried about this type of drawdown. So this probably would have opened at the same level. Then it opens another one over here where it opened at this level. If it waited, it's quite hard to see, but sorry, it crossed below the 0 line around that level, would have been in there. And again, you probably would have had a bit more drawdown because you're further up here at this section over here. But the same thing is you still would also, this trade will also be in profit at the moment. So in this example, it probably on this second trade, it definitely was better to open it where we have opened it. But on the first trade, even though it's open around the same time, it still would have stopped you with not getting all this drawdown. You still would have got all of this because that would have been unavoidable. But I think overall, when looking at the examples we've seen, it looks like that this little tweak does actually help it in doing that. And then lastly, I just want to show you a couple of examples of trades that worked out relatively well, worked relatively quickly in terms of getting in, getting out. and just wanted to see how would it have really made that much difference if we waited a bit longer. So here's an example on GBP JPY where open the trade here, and then it makes its 5 points plus spread around there, and this is where exactly where you probably would have opened your trade if you were doing the weighting method for the MACD to go above there. So even then you would have a little bit of drawdown, 7, 8, you might have made it there. Again, minimal drawdown, you definitely would have made it over here. So when you actually think of the lowest point of drawdown on this one was around 13 to 15 points. Okay, when you add spread, it was probably about here. It probably was about the same. So the amount of drawdown that you had probably would have been about the same, but you probably would have got out quicker than you would there. Here's another example here. This one didn't take the trade. My assumption is probably because of the max spread. But if we look at where it would have got in, it would have placed 2 trades on this one. You probably would have got in about here. And again, you would have easily made it somewhere about there. Whereas if it did do these 2 signals and you waited, you would have gotten around here. You might have made it there, just there, thereabouts, maybe depending on spread. You would have got 10 points around there, but then you would have easily made it over there. Here's another example actually, which I didn't see. So this one here got in, pretty much made it in like 3 bars. But if you waited for the MACD to cross, let's do worst case about there. You still would have easily made it there. So in both scenarios, they would have worked out nicely. So again, those are just 5, 6 examples where I think that adding into the EA code of you get a signal, but you wait until the MACD crosses above or below the 0 line, because I think it's actually a safer system, will reduce the drawdown. It will probably reduce the multiple trades, because if you look at the example, if I go back to USD JPY, 1, 2, 3, 4, if you just wait for it to cross once, that only would have been 1 trade. You wouldn't need to have opened 4 trades. If I go back to GBP USD, 1, 2, 3, 4, again, you wouldn't have needed 4 trades, you just would have needed 1. So again, it opens less trades, and then when I think this is a better protection when it trades, and it trades really, really strong. So I'm going to ask my coder to code this in, and then what I'll probably do is test that in the live environment as well, because as long as it shows 1 signal, all I need is 1 signal for it to make it will make a trade, assuming that spread at the new point is under 2 pips, then it will open the trade. So I don't need 5 trades open to make the same result as what 1 trade could. So hopefully it will reduce drawdown, reduce the number of trades that are open, but doesn't reduce the number of it won't reduce the number of signals it produces to create the trades, if that makes sense. So like I said, I really hope you enjoyed this video. Again, forward testing this EA, this is kind of what I'm learning, and this is the stuff I want to kind of learn more about. So yeah, I really hope you enjoyed it, and look forward to seeing you on the next video.